Hi, everyone. Welcome. We're excited to have you with us today for a special session with Tom, one of eToro's top popular investors. Tom, it's a real pleasure to have you here today. Obviously, a bit of a rough beginning, but it's a real pleasure to have you here with us today, with over 5 consecutive years of profits approaching $100 million in assets under copy. Tom will now take us through his presentation, covering his strategy, approach, and key insights. After that, we'll open the floor for a live Q&A, so feel free to prepare your questions. Due to high demands and in line with eToro's risk management policies, the minimum copy amount for new copiers of Thomas PJ will increase to $20,000 starting in July, the beginning of July. So this is the perfect time to hear directly from you, Tom. But first, Tom, how are you today? Would you like to start by telling us a bit about yourself? The floor is yours.
Yeah, sure. Thank you very much. Let's first of all see if I can start sharing my screen, if that's okay.
Sure. Do you want to try again? Good.
So yeah.
By the way, can everyone hear us? Feel free if you can just write in the chat or in the Q&A. Oh, I see that someone already wrote. Okay, that's great. So I think that everyone can hear us. Great.
So just to check, that should be the welcome. And then can you see the second slide now? No, okay. If I go, okay, here we go. Thank you. Yeah, so I think Shani's put it in much better words than myself, but I'll go through that again. So yeah, hi, my name's Tom, also known as Thomas PJ on eToro. I'm an elite pro investor and have been for the last 5 years or so now. Or sorry, I've been on the platform for the last 5 years as a popular investor, and recently have reached the accolade of the most copied popular investor on the platform. And yeah, as Shani said as well, will be just about to reach just over 100 million assets under copy. So we've done this webinar to I think if I click there, to kind of go through, introduce myself, and give everyone a bit of a background to me and my experience, and then also we can dive into the strategy that I use for my portfolio over the last 5 years. Look at the performance that we've had. Before kind of moving on and going into some kind of closing thoughts on what's going on in the market before finishing with the Q&A. So please post your questions in the chat, and hopefully either myself or Shani can kind of highlight them, and then I'll answer them as best I can. So I'm by trade, or by kind of degree as such, I'm actually a chemical engineer. I studied for 5 years, doing my bachelor's and my master's at the University of Bath, which is in the southwest of England in the UK. Following that, in 2019, I then moved to London and started working as an analyst in kind of within commodities trading, within the commodity trading industry, which kind of blends a bit of engineering experience of kind of physically moving things like oil and gas around the world, but also needs a bit of financial experience and kind of expertise in terms of the kind of geopolitical knowledge, as well as more of the kind of macro knowledge as to the use of futures or derivatives to lock in the profits that you might get when you start a trade. Currently, I'm working at one of the major commodity trading houses. But to be clear, I'm working as an analyst. Some people find it quite surprising, in fact, that I do have a 9 to 5 job. But I find it really kind of helps add to my eToro portfolio. I think it's really helpful to be, in a busy environment where you're very well connected, but also, having the chance to learn from people much more experienced than myself that have been trading, for decades as such. I think, can only kind of help someone in their journey to trading. So I'm always happy to learn from those guys. Outside of work and outside of trading on eToro, I do have some hobbies. Back in April this year, I ran my first marathon. I did the London Marathon in just under 4 hours. And in about a month's time, in 4 weeks' time to be exact, I'm going to look at doing my first Ironman, which will be in July. So any copiers or any followers as such that are based in Vitoria-Gasteiz, which is in northern Spain, if you're out there, I'll be running around somewhere. So look out for me and give me a cheer if that's okay. On the platform itself, I started trading on eToro at the end of 2019, December to be exact. After about 4 months in April, I gained my first copier. And then from then, have progressed through the ranks of becoming a popular investor, cadet champion, and just over a year ago, became an elite pro investor. That process involved not only the growth of the portfolio, but also passing some exams. So I've got my CISI, which is the Chartered Institute of Investing, the level 3 and 4 exams in wealth management from them, which are requirements needed by eToro for me to move up and manage more money as a to be risk conscious. In addition to that, to be clear, as an elite pro investor, I've got to maintain at least $100,000 of my own equity on the platform. So anybody looking at investing in on eToro, do know that I'm equally invested in this as you are, and yeah, it's a requirement by eToro. In terms of the portfolio itself, I predominantly trade US or European mid to large equities. I may occasionally hold, ETFs such as gold or silver in the past, or maybe things like CFDs such as the VIX, which is a series of options. But again, predominantly equities, long only strategy. I don't use any leverage, and I don't trade any crypto or FX. Um, but over time as such, my strategy's kind of developed, but in key at a top level, my portfolio is what's known as a macro portfolio. So as a macro investor, helped by working in the kind of financial trading industry, I pick out sectors that I think are going to perform better than others compared to the wider market. I will kind of have my macro view. So, for example, in the last year or so, there's been a lot of focus on the Fed, who set interest rates for kind of national debt in the US, and then the effects that those have on inflation in the US, and how that might affect the market, and will it cause a recession, for example. Currently, obviously, this week there's been a lot of headlines to do with geopolitics, which also is a part of it in terms of what's happening in the Israeli-Iranian kind of conflict. So, all of these kind of things help me form 3 or 4 sectors I like to diversify. And then within each sector, I'll pick out maybe 5 or 6 stocks, and then I'll trade in and out of those stocks based on technical indicators, things like RSI, moving averages, which will help me not only enter and exit a trade, but maybe also add to it or kind of trim my position as such. So I do get asked quite a lot, what is your investment process, maybe on specific stocks. And although I may not comment on every single person that asks these things, in general, my process, I'll look at what's currently happening in the macro world. I'll dive into things like, what is the current inflation in the region that stock focuses on, or what's going on geopolitically. And as I said, I'll build that watch list of 10 stocks. Once those stocks, for example, let's say I'm focusing on something like European defense, if I'm looking and that happens to pull back down to, for whatever reason, the market gets a bit jittery, I'll be looking at kind of technical indicators, things like, has the stock pulled back to its 20-day or its 50-day moving average, which act as supports. And once the stock is at a support, that generally means that it shouldn't go lower, or if it does go lower, it'll go to the next support. From there, that's a great place to then enter that trade, and then I'll, over time, add to that trade as it continues rallying with the moving average. And if at times in the future it kind of overextends, maybe the RSI gets to something, like something high, like 70s or 80s, at that point I might trim back or close the trade as it turns into more of a bearish position. But over the last 5 years as such, that's worked well. On top of becoming the most copied investor on the platform, I've also got over 100,000 followers now. So I regularly do post on eToro kind of 2 to 3 times a week. And, that's the kind of following I have. In terms of actual copiers, I've just gone over 30,000 copiers, which has increased my assets under copy to 100 million. Since starting trading in December 2019, I've averaged just over 34% a year, which, to kind of put it into perspective, over a 5-year period is about a 280% growth. So nearly kind of quadrupling, sorry, what your investment would be if you added money in 2020. to kind of deep dive into the numbers a little bit more, you can kind of see there at the bottom, we've got the month-by-month performance of the S&P, and on the top, we've got my month-by-month performance. And then on the far right-hand side, that's the kind of total for the year as such. So, to highlight as such, the portfolio does go up and down. It's either more of a volatile kind of trading process, and but overall, we have most importantly, not had any years so far that are down years, and generally grow by 5, 10, 15% over what the wider market has done. And although that may not seem by a lot when you look at it in terms of, investing in the long term, in terms of how kind of you get compound interest, that your growth then grows again the next year. Over the last 5 years, the wider market, the S&P, which is a free benchmark to invest in, has grown by just under 90%. So it's doubled in that time. Whereas my portfolio is up just under 300%. So again, quadrupling in that time. So yeah, compound growth is very, very powerful over time. And yeah, as we said, we're now at the point where the portfolio has just over 100 million assets under copy. So there's a lot of questions around the kind of risk management that I do with the portfolio, and also that kind of eToro helped me with. So one of the key ones I find really quite helpful is the kind of risk score. You can see a month-by-month breakdown on eToro that kind of highlights what my current risk is. It shows you what the maximum risk that I've been at on a given month. So you can kind of look at, when there was a more volatile period, maybe I had greater gains, was there a higher risk? And then you can also see my average risk. Any popular investor, sorry, on the platform can't have a risk score that exceeds 7. Generally, mine's a little bit lower than that. It's around a 5 or a 6 typically. As times get more volatile, it'll creep to the upper end of that. And as they get less volatile, it'll go down to maybe something more like a 5 or a 4 even. But in terms of the kind of strategies that I use, on top of not using leverage, not investing in crypto, which is seen as a bit more of a risky asset, I also try and make sure I diversify across multiple sectors. So a portfolio of 20 stocks that are all in tech, for example, is very exposed to that kind of tech sector moving up or down. And then finally, the other thing that's very helpful is holding cash. So as Warren Buffett, sorry, very famously is holding a huge amount of cash currently, or kind of coming into the start of this year. And it's a great tool to use as such to hold a bit of your portfolio back and then buy in if the market does kind of pull back. The other question that does get asked as you manage more money as a popular investor is, how do you kind of deal with the emotions behind it? And yeah, being honest, over the last year, I don't think my trading strategy or my trading strategy hasn't changed as such. I've got a preset, number of rules that I use to enter or exit trades, as we spoke about, on a technical basis. I'm quite structured in terms of, the number of stocks I like to hold within my portfolio, the kind of maximum percent I'd have a stock, be a part of that portfolio, as well as the minimum. And then I also, going into any downturn or upturn, I really try and look at the kind of best outcome and the worst outcome on a macro basis that might appear or might affect the portfolio, and then adjust my portfolio. Ideally, if there's a scenario coming up and you can position your portfolio to benefit whether it goes up or down, kind of hedge your risk as such, that's a great way to kind of manage the portfolio's returns, and then that helps if you have a strong strategy to then manage your emotions with it. But on saying that, volatility is a part of the process of investing. Things like drawdowns do happen. Sadly, investing is not a constant line, but back in March when the market dipped, by adding in money then and investing, we were able to get very strong returns in April, which then exceeded what the drop was. So it's a volatile portfolio, but over time it has outperformed the market. In terms of what's happening in the market then. So when I first wrote this a few weeks ago, the market was focusing on what was happening with tariffs and the trade war, what deals Trumps were making with the various countries as such. And there was also a lot of focus on what's happening with the Fed, who are speaking today, their impact on inflation. And then generally, it seemed to be that the tariffs were kind of being quite disruptive. However, but rate cuts were being pushed further back and further back as inflation fears around tariffs jumped up. What we've seen in the last week, however, is a lot of geopolitical risk kind of formed from the Middle East. The impact of that isn't really known quite yet, but it's definitely put a bit of a risk premium on there. So anybody that's been watching my portfolio, I'm holding more cash. I'm using a series of options known as the VIX to offset that risk. But in general, I'm seeing myself as holding a bit more of a neutrally balanced portfolio now, waiting to see what happens coming out of this and what the impacts might be before hopefully the trend continues of kind of market recovery with the Fed reducing rates, which allows people to have, a bit more economic freedom in the US, and that should then pass on to the likes of Europe and the wider kind of market. And yeah, in terms of final word, at the start of this, Shani did highlight that my portfolio is now being moved to a premium product in terms of eToro's eyes, which is, fair enough, as reaching the #1 most copied investor on the platform. So as a part of that, similar to Yepe, from the beginning of the kind of first week or so of July, the new copiers will have to add at least $20,000 to be able to copy me for the first time. But don't worry, any of you that already invest in myself, they can continue to add money, and if they are below that 20,000, that's still okay. So as long as you keep that trade open, that first, be it, I think I've got a slide here of kind of breaking down the minimum copy on eToro for any popular investor is $200. I recommend slightly higher than that, around $250, as that means that at that point all trades should be open, because due to kind of minimum trade sizes. And then, yeah, from the first week of July, $20,000 is the minimum. If you're able to add that minimum $200 now, and then at a later date, be it in July or August, you're able to then add to that. So the only thing, if you're looking at doing that for the long term, is make sure you look at the copy stop loss. That's another risk kind of managing tool that eToro use to help any investor. Copy stop loss is the amount that copy will drop before it automatically closes. Which is great if you're looking, wanting to be a bit risk adverse. But if you kind of trust the process and you're looking to invest for the long term, then you wouldn't want that trade to copy, because if you do, it's going to have to reopen with at least $20,000. But yeah, I think that's kind of a quick summary of kind of who I am, the strategy I use, as well as asking a few questions along the way. I'll
Well, it's time to
my
start with the questions.
Yeah, I got my QR code there, but no, feel free to ask any questions. I think, yeah, any questions
Thank
now.
you
I
so
don't
much,
think I'll
Tom.
come through.
It was really, really interesting, Tom. Thank you so much. I see that some people are raising their hands, so just feel free to go to the Q&A